Hello, welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald. On this, I think we have Wednesday. Yes, Wednesday. I hope you all had a great start into the new trading week. Don't forget, markets in the US are closed tomorrow. As always, before we jump into my portfolio and the markets, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so that you got to see here, so the broker ID charting software, the strategy I'm following, are all linked in the video description down below. And the one thing I can truly recommend is, if you haven't done so in the past, go and check out the Elliott Wave Principle. You can read this nice book online for free when you use the link in the description down below, or you can use the same link to get yourself a physical copy. Now, that said, if we jump into the portfolio, we see we have another more or less break-even starting to the day, although with a slight red touch today for a change. Let's hide that message. Unlike what I thought and what my 8-ball thought yesterday, GameStop actually went up a little bit. We're still in almost everlasting dilemma. Should I roll my covered calls or not? We'll have to wait 2 more minutes to see the current rate for those options. Theoretically, as long as we're below 34 per share, they should be 34.20 or so. They should be in profit, which means rolling them just means we are not realizing a loss. We're just that we don't need anymore. That would have triggered here yesterday. So we don't have to roll them and basically realize a loss, but we still get to potentially roll a small profit. But yeah, so the way things look right now, I still expect that there will be a correction, which is a little bit of an issue because right now we would need a 10% correction within the next 9 days to get below 30, and with that basically ensure that our calls expire worthless, otherwise we lose the shares. Now, I'm not against losing the shares, because if I lose the shares, I could write new cash secured puts, which we will see in a second how that works premium wise. But the problem there is, if we look at the $30 cash secured puts, again, we're waiting for the market to open to see the rates. The premium isn't as juicy, so we could maybe make I don't know, like $300 to $600 in a week. Yeah, maybe. I mean, which still would be a nice amount of money, but it's nothing compared to premiums for the calls right now at the moment. Yeah. So not having the shares call, and that also means if the price goes higher, we either would have to write calls at a higher strike price, which means we could only write fewer calls, or we get way less premium. So holding on to the shares actually seems like the smarter play. The problem is, since we already sold the $30 covered calls for January 17th, we'll have to get calls that are further out in time. So I'm going to zoom out maybe a little bit so we see more of the deadlines. And if we just roll them out, $30 for February 21st, for example, we could potentially make still a decent amount of money in premium. But that would mean we would then expect that by February we actually are below 30 again. So we don't realize any of the extra potential profit. Whereas if we want to roll them up as well, so our maximum target expected for wave 5 would be around $40. So if we want to roll them up as well, then we have to roll them further. So to visualize that, markets are open. So if we say we would buy back the $30 covered calls, we can see that they are around $385 per option. Now, if we only roll them out by 1 week, we can see that there is no, so even the first, we might roll them up by 50 cents. So we already have to consider February, and then we can see that for February, so here we have 375 to 4. So even for February, we could roll them potentially maybe, so we would sell those. You can see that if we roll them to $36 per share, then we basically pocket a small $120 credit. Yeah, so it's not really that great. If we want to play it safe and go to the $40 mark, we either would have to pay $300 or roll them further. The one benefit is we now get the February 28th expiration. So we actually might be able to roll them to 40 for February 28th, and we're going to try that to roll them for basically credit. So we can either, we have minus 15 euro cash. If we roll that, we basically have a minus 100 euro cash balance. We don't have anything that we are closing out right now. So that doesn't help us in any way. Because the next expiration would then otherwise be March, which is a whole month longer. Let's see if we can roll them out for free. So, and obviously we would have quantity 6. So we buy back the January 17 $30 call, and we sell the February 28 $40 call. And now, depending on the price movement, we might be able to get this order to fill. Or it just gets more and more pricier. Or we just fill it. We fill it for $60. This way we have the headache solved. Yeah. So it closed out our 30 calls, and we realized $600 profit from those. And on the other hand, we basically from the new calls that we sold, which are February 28, we okay, we could have gotten them a little cheaper. Yeah, but it is what it is. So the mix calculation, yeah, is fine. So we basically got here $336 per call. As said, we had to compensate or cover the cost for the old calls. So we didn't make any, we didn't roll for credit here, but we also didn't realize a loss on the existing calls. Yeah. Okay, that's why we actually, yeah, got it. Yeah. Yeah, so anyway, that solves our problem and my headache for now, because this way our expiration is, first of all, we're looking at a 40 expiration. So if the price goes further up, we are capable of, or we can realize another $6,000 in profit from the shares. And we, however, we didn't have to go into the March 21st expiration, but February 28, which means we're not bound by this line anymore, but February 28, 21st didn't work. So 28 is this one here, come on, roughly here. And the other expiration would have been here, where we would have potentially made a little bit in credit, but again, it would be an entire month more waiting. So with that, pretty much the decision is made. We bought ourselves some time. Of course, whoever bought those calls from us could execute them early, but on the other hand, we now sold them at for a $40 call strike price, which means we again have more wiggle room. So GameStop could technically go till here. Obviously, if it shoots higher, we'll have to reconsider if we want to roll them further, or if we're just happy by pocketing the extra $6,000 in profits from the shares. If it goes down, and especially if it goes down before the 17th, I'm going to kick my ass a little bit, but I think it's better safe than sorry, because we were approaching areas where the existing calls would have been at a loss. So, and yeah, if that would have been the case, then it would have just become more expensive potentially to roll the to roll them. So sure, in the past we could have maybe rolled them here where we were at a 1200 pending profit or so, but then the premium wasn't as high either for the where we just rolled them. So overall, I think, like, yeah, we could have done worse. We could have done better. So I guess we'll just have to, yeah, like, wait and see how this plays out. Like, obviously now the challenging, we'll have to look at the bigger picture at some point again, because this is obviously just one move that makes up other moves. Clearly, it's still possible, although this looks like a 5-wave move, 1, 2, 3, 4, 5, which indicates that the correction is finished here, and now we get wave 1, wave 2, wave 3, wave 4, wave 5. So it's still possible that we'll go down, right now, but from the looks of it, it looks like we haven't finished this fifth wave yet. And we don't need that alert anymore. We can cancel it. We don't need that alert anymore. So I believe that we still will have to see a little bit of upward movement. Our maximum target in quotes would be here. It's possible that we exceed it, yeah, in which case we again have to consider, again, as said, if we want to roll the calls further or higher and further out or not, or if we're just going to be happy with the extra in quote 6,000. But I think at 40 I would already be happy, because then after that, so even if we go higher, the next target would be, I think, at 44, so at 161.8. So it should be 41.4 or not. No, it's higher. 53, yeah, like percentages. Obviously it's 60% more net, not, yep. So yeah, $6 more, no, like it's $13 more. Wait, what? Yeah, my math's not mathing right now, but basically 53 would be the next maximum target area. From the looks of it, if this is basically wave 1, wave 2, and currently wave 3, the next wave 3 target area would be here. So it's very, very, well, I don't want to say guaranteed or anything like that, but it's possible that this move here now will just take us up here, and then we get our next correction. So we would stay below 40 most likely. We'll have to keep an eye on it. Obviously, if there's still a huge short exposure and somebody would be forced to close their position, then it could go much higher. But for that, we also hold shares in computer shares. So it's really just that I kind of got to enjoy the high premiums of GameStop, and so letting the shares go in combination with the upwards potential, so letting the shares go is a tough, or would have been a tough choice, because then I would have had to find some other opportunity to invest them in some way. I think this way, I said, we can realize more of the profit to the upside if there is a temporary correction down or so. Yes, for now, basically for 1.5 or almost 2 months, we're missing out a little bit. Because, or actually a little longer, because we sold the January calls, I think here, back end of November. So there's not much income happening. And if GameStop goes down, our portfolio will suffer temporarily, at least because the shares will lose in value. But I think that long term, it doesn't make a huge difference, and that it actually is the smarter play this way. So, yeah. I mean, I could be proven wrong within the next couple of days if from here we suddenly now go down, and on January 17th we are below 30. Then obviously I missed out on a lot of premium that I could have earned in that extra period. But yeah, so, and here actually, can I drag that exactly to 40 maybe? This, yeah, so that we can actually add a horizontal line or not. So, and just, can I, if I click on it, there, yeah, 40. So we kind of are within that box. And can I also, is there a, okay, there's no setting for the value. February 28th, yeah, like this, and yeah, like that. So within that box, our options would expire worthless. If we get higher than here, so we actually shouldn't extend them. So, but that should also just be here. And then we don't extend it. And again, just modify up. So yeah, so if we stay within that box, then our options expire worthless. And then after that, we can write new call options. If we exceed that box to the top, and especially by expiration, so that line actually could be higher. So, so especially by expiration, then we would have our shares called away. Yeah, so I have to keep that in mind. Now that here, because we zoomed in, yeah, like the things behave a little bit weird sometimes when we zoom. So we can look at things for like this for now. Right now, I expect that this is a small corrective wave. The question is, does it just correct this move, or does it correct bigger? But that wouldn't help us much, because while it would have increased the profit from our current option, it also reduces the premium that we get for the other ones. So I think the way we did it is already okay. It could be done better, but we're gonna live with that decision. Yeah. Anyway, moving on, Barnes & Noble Education Inc. is yeah, like still moving slightly sideways, unchanged. We're bullish. Grab, how is Grab doing on our weekly chart? So correcting right now. After that, we expect further upward movement, unless this is just an A, B, C correction and we're going further down. But my risk here is limited to $50, so I don't care that much. Either I'm right, then we have like an $800 payout in January 26, or I'm wrong and we lose 50. Immersion, surprisingly going a little bit lower. If we break the, what do we have here, the 817, we're going to create an alert here. So create alert 817. What? Yeah, so then we have to consider that somehow the correction isn't finished yet. As long as we stay above 817, we're good. Costs should eventually break this channel here, so we'll just wait. Neo should, in my, oh, there we went a little lower. Okay, that's like not such a great event. I still believe that there's more upside to come, but obviously now we made a new low, so we'll have to reconsider at some point what's going on here. That should then move. That would go here. It forces us to also adjust our profit target. I would like to increase our position here. So not too bad if we get lower, but if we break the 432 relatively consistently or so, then we would have to, I mean, we actually would have to worry if we break the, yeah, like the ultimate stop loss would be at 363. But yeah, we'll have to wait and see. Novavax having a little bit of a correction now, so but overall should go further up, just not in time for my options, unfortunately. And Bitcoin let go a little bit yesterday. Visually, that looked like the beginning of, or like that's being a 5-wave move. So which is weird. So because this here looked initially like it could be 1, 2, 3, 4, could still be 5. But visually, this might already look like 1, 2, 3, 4, 5, which means ABC and then further correction. Could be, so I'm having a hard time labeling this area here. So yeah, we're gonna hold our Bitcoin position, and eventually we're gonna try to make sense of it. But for now, the position is not big enough to worry. So yeah, we'll just postpone that. Yeah, I mean, visually we have a free wave move here, so we have a free wave corrective pattern here. What could be possible is that we're looking at a combinative corrective pattern. So but yeah, so what also could be possible, 3 waves, 5 waves. So that would be a flat correction in the middle, but then basically would just mean that we should go a little lower here. Yeah, I would worry if we break the 85,000 mark, from which we're still more than 10%, a little bit more than 10% away. But until that, I'm actually quite fine with what's happening. I would prefer it to just go up, of course, like everybody else, but I'm just saying, like, so if we, as long as we stay above 85, I kind of like am okay. If we cross 85, that would be a point where I would have to consider taking a 10% loss and reevaluating. Yeah, anyway, moving on, H&T should go further up unless this is a flat correction, in which case we would go further down first. Really, really weird, yeah, but might have to dig into those things more. Yeah, like I'm just not really in the mood for it today, to be honest. Storage should go further up. XRP should go actually further sideways and down. XYO should, I don't know, like could have finished the correction, but visually that might actually be another 3-wave move. So there might be a little bit more downside to come. Then Nasdaq is slightly red today, but visually we already finished the 3-wave move. So could be that this is the beginning of a correction, but again, visually we have a 3-wave move. So chances that we go higher here are not that bad. If I were to enter now, stop loss would be at 20,800. Bless you. No problem. DJT is moving sideways and slightly down. I would expect it to actually go further up. We had a God, it's been a while since we labeled it. We had a big 3-wave corrective move, and now we should actually be in an upwards move. Although it's possible that we finished a 5-wave move here and are right now looking still at a part of a correction. So yeah, so but long term I'm still bullish here, even though the company is overvalued. Nvidia should still grow further, as we discussed yesterday, I think. So but also doesn't look that great with a potential 3-wave move followed by a drop. It's tricky. If we break the 132.95 here, it's possible that we're on a downwards trend. Looking at this I don't want to be like a, you know, like a doomsday whatever. But looking at this, there are a few things that if we don't get a little bit more upward movement in certain things, then it would point towards a top that actually, so that we just witnessed in the last couple of weeks and months a big top, and that we would actually be entering a bear market. Oh, but yeah, we'll have to wait and see. I'm fine with my GameStop position. I think that okay, average cost is missing. Okay. Probably for the GameStop calls that are, yeah, no, they're still here. For those anyway, yeah. So I'm fairly happy with what we have. A few positions in our portfolio obviously didn't pan out, like Greenwave, SunPower. A few of them we could have already closed at a profit earlier, but we're holding on to them. But they are not that big, so we're fine holding on to them. None of it is on margin, so all of it is basically paid for, so we don't have to worry about getting our positions liquidated. Obviously, now we have a small loan in cash that we have to consider, so eventually we'll have to close out something. Yeah, not sure. Technically, if we close out the call here for grab, although it would pay out better, we'd get $100. That already helps us a little bit. So do we want to? Let's sell that. Yeah, let's sell that call. Get out of grab, so it reduces our burden a little bit. Although I think it would pay off. We could have closed it for $50 more a couple weeks ago. So, but I mean, making 100% profit on the trade is also not too bad. Our Neo, those are covered calls, so no profit in closing those. Novavax doesn't get us anything. I mean, if we sell those calls, it's like really, we would have been better off selling them. There's not even volume. Like seriously, Novavax, $20 call. There is no mid price. There's only the ask. Yeah, so obviously nobody's buying them right now. Could have potentially sold them yesterday. So. But now with that candle, I think maybe we sell in a day or two. So which means on Friday. So tomorrow the market's closed. So on Friday we might sell them. If we get on Friday a green candle, then we might be able to, I don't know, get $20 back or so. So although we also have, where are those? We also have Novavax. Didn't we sell? Wait, we bought, but we also had. Did I already close them out? So we also had $40 calls that we sold. I don't see them anymore, so I'm not sure where they are. So, but yeah, no, not navigating away. Yeah, so we'll not close them out because. No, those are calls we bought, so we can sell them unless we would have other calls against it to turn this into a poor man's covered call. Yeah, so I think we'll leave it like this for now. So we'll pay a little bit of interest on the cash balance that we have right now and carry with us, but it's not that bad. And on the other hand, at least we get to potentially secure more profit on our GameStop position. So that's the one thing that matters. Yeah, anyway, I guess that's it for today. I know we could look into more, but honestly, I have a few other things that I would rather take care of today. It's not going to be super exciting the next couple of weeks, especially because we're also moving next week, which means like there might be no streams next week. I have to see when I take down the streaming setup and when I will have it set up back again in the new apartment. Yeah, so probably not as many regular streams during the next couple of weeks till, yeah, I don't know, till February probably, until we fully settle in a new apartment. And anyway, it wouldn't be that interesting since we now just pushed our expiration out to, yeah, not March, but end of February. So it was February 28th, yeah. Yeah. Yeah, anyway, so that's it for today. Thanks for stopping by. I hope you were still able to take away something from today's stream. And with that, I'm going to leave you to it. We see each other again on Friday for sure with another episode. Yeah, till then, bye-bye.